This is Maximus Analysis here for Friday, February 26, 2016. We held, we need to hold this 1936 overnight, over the weekend, excuse me. They can still pop it up a little bit. I'm actually looking to see if they can get up to the 1978 area, 85 area. And we'll see again, this is this is the midpoint of this entire range coming from this high to this low. And we really want to see how they react and how they go from here. So let's look at the weekly, because again, we were looking at that chart for a little while. And let me actually put the extended contract, not the H contract. And you can see that we're still holding. We are still holding this bear market trend line that I've put out. And again, until we break below that on the weekly time frame, we're just looking to see what type of volume they have going into next week. So we could continue to see another week up, but we need for them not to get back below 1900. Okay, first level support let's say 1928 to 1936, then again 1900 test again. We'll see what happens, because they'll be way below these previous lows here at 2000. So we just don't know if it's going to be a dead cat bounce. We got a little bit more volume in this week, but let's see how high they can go. But make sure you're looking at this weekly chart as well, just to kind of get some perspective on things. We have the NQ. Excuse me. So the NQ, we pretty much have the same deal. They could get a little bit above that 4,300, but we don't want them to get below the 4,200 with increased volume. So again, we don't want to break this and the volume start to increase to the downside. Okay, I think they're right about the 50% of the swing down as well. The YM, we were down, again, the market was down 57, so we need to recapture the 17,000 with some type of volume. Again, above that is the 17,200 level. That's the 200-day moving average, which is at this time sloping downward. So you could see it clearly sloping downwards here. So a lot of people use that as a bear market, but again, the bear market indicator, they're lagging indicators, moving averages. So just be cautious on that, because if the price action screams up, then it is what it is. Let's look at crude. Crude ran all the way up to I think it was 30. Excuse me. I think it was 34.60, and then 34.70, and then just rolled back. So it's still in this mid channel right here of this swing. So we kind of just don't know where it's going to go. So we got to treat it just like that. So again, smaller time frames is something that's probably better for this name, and as well as the equities, due to the nature of the movements at this time. We have Baidu shot up, tapping the 200-day moving average. Again, that doesn't mean that it's going to reverse, but it's just something to be aware of, and we'll see what the price action is on the equities indexes over the weekend, starting Sunday night. If this is going to continue to the upside or give us something to fill this gap. Google, excuse me, Google, again, really sloppy kind of price action. Facebook also has kind of sloppy price action, but it's continuing to go up. So it's sloppy from pretty much this low right here, which is the 9th of February, but it's continuing to grind up, and it is a grind. I tell you, it's not as clean as something similar to these previous swings where it went up, and every day they're breaking a low, just taking out stops and gapping it down and just running stops again. It's just a really horrible type of pattern, but you trade what you have, and that's all we can do. You have Tesla up almost $3. So getting to, again, going to that weekly time frame, getting to that resistance level, and they're only about 2. So let's see what happens next week. They could continue for some upside potential, and again, 205 would be a real critical test of there. So you have this band of support that now is broken, becomes resistance, and let's see if are they going to get above this with some type of significant volume. Excuse me. We have Amazon, pretty much a very flat day, but still holding above its 200-day moving average, but extreme. But again, we want to see if it's going to hold that. So holding this 540 for Amazon will be a critical thing for them. We have Priceline again, just kind of gathering its thoughts, if you want to call it that, above this 200-day moving average. So unless it breaks really below this gap, this gap low right here, that is around 1218, 1219, you're looking for more upside potential with potentially a break of this 1290, 1285 area. So we'll just take it from there. Last name I'll do is LinkedIn. Again, still sputtering, but you can see how many days. I mean, it took a lot of damage, 50% haircut from the gap on the earnings. So, and these are really small, low volume candles. So the first sell signal will give us some type of indication if we get a huge engulfing of probably 4 to 5 days, and then a follow through for more downside potential. Because again, everybody in their mom was trying to re-short this on the gap down. And this is just easy squeezing, as weird as it sounds. So there's probably going to be a ton of stops above here for those that just went short. So if they break above here, that I would still look more, again, really eyeing the volume, because you can see how much it's died down. But there has to be a ton of stops up here for people that are chasing, and I don't see why you would hold. But there's some people that are. So we'll continue to look at that. And getting back to the ES, again, it is at 1942 right now. And this is your traditional shooting star candlestick pattern. Just looking for something to really lean against, and just, again, keeping it real simple. We just have this right here. So you can see exactly where it lifts, and we'll go from there. So again, have a great weekend, and let's see what we get on Monday. Take care.